Hello, my name is Maria Clark. I am the Executive Director for the Non-Resident Tax Help Group, and this is a re-recording of our tax orientation for international students and scholars for tax year 23. The original presentation for this was given on February 3rd, 2024. At that location, we had representatives from the University of Minnesota International Student Services. Both Megan and Stacy were there, as well as additional representatives. They started with some reminders from the U of M International Student Services group, which is that they cannot provide tax assistance. However, they do have some helpful information out on this website, and you're welcome to contact us, the Non-Resident Tax Help Group or NORTH, or NRVTAP, which is a University of Minnesota student organization for tax assistance. They did have a survey as well, and you're welcome to fill that out also and provide feedback on this presentation. So a little bit about the agenda for today. We're going to do some introductions and then talk about federal tax overview. This will apply for all international students. It doesn't matter what university or state you're in. We will talk about Minnesota state taxes as well, and then about our services and support that we provide. There was time for some general Q&A, which we won't do as part of this re-recording. The team that we had, again, Megan and Stacy were here from the University of Minnesota International Student Services. We had several representatives from the University of Minnesota payroll group, myself, and then Zihao, who is the NRVTAP president. Again, NRVTAP is a University of Minnesota student organization. Just a little bit more. So we are both charitable organizations. NORTH has a slightly broader scope. We provide tax services and education to those who are or were non-resident aliens, where NRVTAP's focus is on University of Minnesota students, scholars, teachers, and researchers. For NRVTAP, again, they're a nonprofit. They work focused primarily on University of Minnesota Twin Cities, but they also do help other students at different University of Minnesota campuses. They provide extensive volunteer training. They help people from all around the world, and they are growing rapidly. Currently in March, they are still recruiting for volunteers for their leadership team. So if you would like to be a part of that organization and you're a University of Minnesota student, we would love to have you talk with us about that. All right, let's move on to the federal tax overview. So the first thing that you should know about the U.S. income tax system is that it's done on a calendar year basis. And by that, we take all income and all expenses from January 1st through December 31st for 2023. You do not file taxes for a specific job or an income document. You also do not file based on an academic year. It's based on a calendar year. And as you can see from this, you as a taxpayer, as a student, you are involved in the entire process. The University of Minnesota, or whatever your organization is basically involved with you kind of before the tax year, during the tax year as you receive income, and then after the tax year as well. NORTH and NRVTAP are the blue. We basically get involved after the year ends. So we're here right now in the middle of the tax filing season from December 31st through April 15th, and we provide support ongoing after that. The IRS is a little bit involved during the tax year, more involved during the tax filing season, and then they would be the drivers of much happening in the time period after you filed your taxes. So this is an income tax, which means money that is coming into you. As we look at the US tax system, some types of income are not taxed, but many of them are. As you earn more money, you will pay more taxes. The tax rates start at 10% and they go up to 37%. So as you earn more, you have to pay more tax. There are lots of special rules, exemptions, and adjustments. Those rules depend on your personal situation. That is why when your employer, for example, takes money out of your paycheck, it is just an estimate of it because your personal situation may adjust and may change what your final tax calculation is. When you pay tax to purchase an item, that is a sales tax that is charged automatically when you buy something, and generally you can't get a refund and you don't have to file any sort of a tax return for those taxes. One of the other big differences in the US tax system is that it is every person's individual responsibility to calculate and pay their own taxes. Taxes are a pay-as-you-go system, so as you receive money during the year, you are supposed to pay something close to the amount of tax that you will owe. If you don't, if you owe a large amount of tax at the end of the year, the tax authorities will charge interest or penalties because you didn't pay enough during the course of the year. If it goes the other way and you get a large refund, the government is very happy to give you your money back, but they will not give you any interest for that. As you earn during the year, the organization that gives you money may withhold some portion of the money. That means they send it directly to the tax authorities on your behalf. They only do that when they're required by law to do so. And it's always an estimate. Generally, there are some reference tables or percentages that they use to determine how much to send in. Sometimes you can give whoever gives you that money some guidance, such as when you work for a company or the school as an employee, you fill out a W-4 form that tells them information about what reference tables to use. And then you can always send in more money yourself if you want to. That's called estimated payments. At the end of the year, you are required to complete a federal and state tax return, if that applies to you, to compute your actual tax liability. Then you file your taxes, which means you either electronically or on paper, you send in your return to the tax authorities to tell them what the results are, what your total income is, what you've calculated your tax to be, and then either the payment or the request for the refund. And you may need to do this even if you don't owe any taxes and you don't get a refund. And every taxpayer is ultimately responsible for the information on your tax returns. When you need to file a tax return, you will need a tax ID number. The type of number that you get will depend on your personal situation. If you're authorized to work in the US, you're going to be eligible for a Social Security number. This would include things like on-campus employment or OPT, CPT. If you get income but you're not authorized to work, you will need to get an ITIN number, an individual taxpayer identification number. Generally, this is for individuals who have a taxable scholarship or fellowship. If you don't need to file a tax return, you cannot get a tax ID number. Even if a credit card company, for example, says that you need a tax ID number to get a card, that's not sufficient reason for the IRS to issue you an ITIN number. If you do need help getting an ITIN, please feel free to reach out to us. You can send us an email at itin@nrtaxhelp.org. We'll be happy to walk you through that process and help you with that paperwork. After you file your tax return, you will receive a notice from the IRS if you file it electronically that they have either accepted or rejected your return. That first check does not mean that the IRS agrees that your return is correct. It just means that it passed kind of the first round of checks, such as your name and your Social Security number match. The math on the forms all work. Your W-2 information matches what's already been sent in to the IRS by your employer. After that, the IRS will then process your return. They do more checks. They may send you a letter if they want additional information, or they may send you a letter to confirm your identity to try to protect your refund to make sure it's not claimed fraudulently. And then once they've done that, they'll send you your refund. And when you get that money, that's kind of when you can consider that the IRS has agreed with your return. If you owe money, the IRS will not send you any sort of a notice to say, thank you for paying, your return is right, anything like that. They will basically just process your return, take your money, and that's it, unless they decide they aren't sure about it, in which case they will send you a letter. So they can decide to review your return to make sure it's correct. They have up to 3 years to do this for any reason. They can also do this forever if they suspect fraud, that you're deliberately filing a return that's not correct to get a larger refund than you are lawfully entitled to. If you get any kind of a letter from the IRS or from a state tax authority, we would encourage you to go ahead and reach out to us. We would be happy to help you understand what that letter is, look at your tax returns to see if we agree with what they said, and then we can recommend some next steps and some additional help that's out there for you if you need it. All right, so what will affect how much U.S. income tax you own? The first big one that affects it is U.S. tax residency. Depending on your citizenship status, if you're a citizen, you're a resident automatically. Same for green cards holders, you're automatically a resident as well. Everybody else may or may not be a U.S. tax resident, and you may or may not be eligible for treaty benefits. Your marital status affects your tax return. Your income affects your tax return, both how much income you have as well as what types of income you have. It also matters where the money comes from, if it's from a U.S. source or an outside source. Finally, how you spend your money also can affect your income tax return. So do you support anyone, such as a child or parents or other people that you live with? Are you repaying a loan for some sorts of purchases, such as student loans or home mortgages? Do you pay tax to other governmental units, such as state income tax or car registration taxes? And do you have qualified educational expenses? So are you paying out of pocket for tuition or required books or fees? All of those things are just a few of the things that can affect your U.S. income tax return. So to talk more about tax residency, because this is a very big one for international students. Again, like I said, if you're a U.S. citizen, you are a U.S. tax resident. An alien, I apologize for the term, but that's what the IRS uses. An alien is anyone who is not a citizen of the United States, either through birth or naturalization. A resident alien is basically taxed the same as a U.S. citizen, though occasionally they will enjoy treaty benefits. This means that they are subject to tax on their worldwide income, and they also have to report their worldwide financial assets. A non-resident alien is subject to special rules. They have limited deductions and credits. However, they are only taxed on their U.S. source income, and they don't have any requirements to report their foreign financial assets. So, who is a non-resident alien? So if you have not been granted the green card status and you have not passed the substantial presence test, you will be a non-resident alien. The substantial presence test is a little bit complicated, but it looks at the number of days you were here in the United States during the past 3 years, and then applies some math to those to determine your residency. And this is done every year that you're present in the United States. There are some individuals that are exempt from this test, which we'll talk about on the next slide. Resident aliens will be people that pass that substantial presence test or who have a green card. In addition, a non-resident alien or a dual status alien who is married to a resident at the end of the year can also choose to be treated as a resident for the whole years. And a reminder that residency for tax purposes is different than residency for immigration purposes. Tax definitions of words are definitely different than what immigration terms used. All right, so some people are exempt from this test for residency. So that is going to be individuals on an FJ/MRQ visa for the first 5 calendar years that they're in the US, a teacher or a trainee on a J or a Q non-student visa who was not previously exempt as a teacher, trainee, or student for any part of the 2 of the prior 6 calendar years in the US, which is a mouthful, and we've got some good support for that in just a moment I'll talk about. In addition, family members basically use the same rules depending on whether they are here on a -2 for a student or a -2 for a teacher, trainee, or other non-student. If you are exempt, you do not count the days that you are here in the US as an exempt individual towards the substantial presence test. Usually this will mean that you're a non-resident alien during those years, but it is not guaranteed. It's almost always, but not completely always. And then one final very, very important rule is that being exempt from the substantial presence test does not mean that you're exempt from paying taxes. It just means you're exempt from the residency test, but you still have to pay taxes if you have US income. So we have a handy tool to do all of that math for you, because it does get a little complicated, especially if you've been in and out of the US a few times or ever changed your visa. So the QR code in the upper right-hand corner takes you straight to that tool, or you can click on the link here in the PDF. And basically what you have to do is enter your visa information and your visits to the United States, and the tool will do all of the work to tell if you are a resident or a non-resident alien. And that's very helpful for you. So you don't have to worry about that test. You just have to know what your travel history is. Go get your I-94 and you can enter it here and figure out that information. The other important thing to note is that if you are not a US tax resident, if you are a non-resident alien, that means that you are a tax resident of a different country. And you'll need to know what that country is. Generally, that's going to be the country that you were living in before you came to the United States. Usually you have to live in a country for at least 6 months to establish tax residency there. Almost always that's going to be your country of your citizenship, your country where you grew up with your parents. But occasionally it can be different depending on your personal circumstances. If you have any questions about that, you're always welcome to email us. We'll be happy to help you figure out that information as well. All right, there is a special thing called a dual status alien. It is somebody who is part of the year, they're a non-resident alien, and then part of the year, they're a resident alien. They have special filing requirements and generally only occurs when somebody comes into the US and passes the substantial presence test, that residency test during the year, which is often usually on an H-1B visa or some other type of non-student or non-teacher visa. It can also be an individual that was on an F or a J visa and that received a permanent resident status, a green card, during the tax year. It can also be students who have been in the US long enough to kind of pass that 5 years of exemption, have become residents, and then leave for a final time. Unfortunately, the IRS has determined that dual status aliens are out of scope for the VITA program, so we cannot help individuals in this situation. Those rules are complicated, and those taxpayers will need to see a professional for assistance with their taxes. So, what are the effects of tax residency? So, for some things, it doesn't change. For example, if you receive a gift from your family to help support you at school, in the US, if you're a resident, you're not going to have to pay tax on that. The same thing for a non-resident alien. If you earn wages, those will be taxed if you're a US tax resident. Occasionally there can be some treaty benefits, but almost always not. However, non-resident aliens will pay tax, but they also commonly or very frequently get treaty benefits if they're from a country that has a US income tax treaty with that kind of a provision. If you earn wages while working outside of the US, if you're a US tax resident, you still have to pay US taxes on them, but non-resident aliens don't. For investment income, generally residents will get taxed at a lower tax rate. Non-resident aliens will also have to pay tax, and it will generally be at a 30% rate or more, so it does get very complicated. Business income, both inside the United States and outside of the United States, does get quite complicated, but generally if it's in the US, it's going to be taxed. If it's outside of the US for non-resident aliens, it won't be taxed. For US residents, it will be. Those are generally going to be out of scope for us for non-resident aliens, but we will be able to help tax residents, at least on the US income. If you receive a scholarship or a fellowship, if you're a resident, there are essentially two options. If that scholarship or fellowship pays for tuition or required fees or books, it will be considered a qualified scholarship and it will not be taxable. If it goes for other expenses, such as living expenses, room and board, that kind of thing, it will be taxable income for you. For non-resident aliens, there are some differences here. So if it comes from a source that's outside of the United States, it is not going to be taxed. Again, if it comes from a US source, but it goes for qualified education expenses, it will also not be taxed. If you are from a country that has a tax treaty benefit, you may not have to pay any tax, even if that money goes for what would normally be taxable expenses like room and board. And then finally, if there is no treaty benefit, you will get that same taxable income if it is going for non-qualified expenses. All right, a couple more special rules for non-resident aliens. So, an individual that was exempt from that residency test must file the Form 8843 even if they have no income. One of the very unique things about this form is that you do not need a Social Security number or an ITIN number to file this form. If you have one of those, you can e-file it. Otherwise, it's got to be filed on paper. We have a new 8843 only tool where you can use our personalized guide on our website and answer a few extra questions, and we'll fill out the form for you. So we encourage you to consider doing that. If you do have income, then you also must file a Form 1040-NR. It must be filed by generally April 15th if you had taxable wages. It can be e-filed in most situations. Paper returns are sent to a special address. It goes down to the Internal Revenue Service in Austin, Texas, or if you include a payment, it goes to Charlotte, North Carolina. All right, so a few kind of general broad rules about taxes for non-resident aliens. So only US income is going to be taxable. So if the money comes from outside of the United States, you don't have to pay any taxes on it. The United States doesn't care. However, if you have any amount of taxable income, so money from inside the United States, you do have to file a tax return. That is different than residence. You cannot file a joint return with your spouse. You have to use the married filing separate status. However, married means married, so you do need to file using the married status. It doesn't matter if your spouse is here in the US with you or still back in your home country. Wages will be taxed, although treaties may exempt a certain amount. Generally, if you're a teacher or researcher, those amounts are often unlimited for a couple of years. For students, you get more years, but it's a smaller amount. This income may or may not be reported on a 1042-S. Your ability to claim a tax treaty is not based on the income document that you receive to report that income. So even if you don't get a 1042-S and you are eligible for a treaty, you still can claim it on your tax return. Again, scholarships, they're tax-free for everybody if they're for tuition, required books and fees. They may be treaty exempt for room and board or other expenses, but generally otherwise, if you don't have a treaty, they are going to be taxable. If you own or operate your own business, so you have an Etsy shop or you drive for Lyft, something like that, generally that income is going to be reported on a 1099 NEC or 1099 miscellaneous. That is out of scope for us to assist with. The one exception is the state of Minnesota one-time tax payments that were provided here. Those are reported on a 1099 miscellaneous from the state of Minnesota. We can't help with those. Dividends and capital gains are generally going to be taxed at 30%, although sometimes there can be treaties. They are reported on Schedule NEC of the 1040 NR. They're not reported as a standard income on the traditional forms that residents use. Bank interest for non-resident aliens is not taxable and not reportable, so you guys get a deal there. You don't have to include it. It's just not taxable, not reportable. Cryptocurrency or other digital asset sales are also capital gains, and unfortunately those are out of scope for the IRS FIDA tax clinics. So the software can handle those, but we can't talk about them. The IRS says that that is not in scope for us to assist with. The next thing is about deductions. So subtractions from how much income you have to pay taxes on. If you are a student and only a student, you can use the standard deduction. All other types of visas from India and then everyone else who is a non-resident alien must itemize. And when you do that, you can subtract the tax that you paid to a state or local government from your federal income and not have to pay federal taxes on that. If you did that last year and you got a refund, that amount of your refund is going to be taxable income this year. Our guides walk through all of that to help you figure that out. Generally, as a non-resident alien, you are not going to be eligible for many credits, and you will be completely not eligible for any education credits. So if you received a Form 1098-T from your school, even if you receive that form, if you're a non-resident alien, it doesn't help, and you're not going to be eligible for any education credits. So, non-resident aliens on F1 and J1 visas will not pay any Social Security or Medicare taxes. Resident aliens do pay those taxes. So if you are here long enough and you become a resident alien, generally this is like when you start OPT, you will have to pay those taxes then. If you are here on a -2 visa, it doesn't matter what your residency status is. Whether you're a non-resident or a resident, you will have to pay those taxes also. If you are not supposed to get those taxes charged and your employer does take them out, this is relatively common for individuals who work internships. First, you'll need to ask your employer for a refund. If they won't, then there are 2 forms that you have to file with the IRS. We have information here about those. This is entirely separate from your income tax return and refund, and it does not have a deadline of 4/18 or 4/15/2024. If you would like our help, we would be delighted to help you with this. You can talk to us if you come to a clinic appointment. Otherwise, you can send us an email. We usually help people with this in the summertime. So starting in May, we will reach back out to everybody who contacted us and help work through filling out those forms and help you get those submitted to the IRS to get a refund. You should also know that these refunds do take a long time, something like 12 to 18 months to come through. So it is not a quick process, but it's completely separate from your income taxes. So it can be handled on a separate timeline, both for the application of the refund forms and then the receipt of the refund. All right, so next I'm going to move into a brief introduction to Minnesota taxes for non-resident aliens. So I talked about how residency for federal tax purposes is different than residency for immigration purposes. Residency for Minnesota state, and for most states, in fact, is different than both the federal tax definition and the immigration definition. Everybody has a different meaning for that word. So for Minnesota, for non-resident aliens, your status, your residency status will depend on whether or not you meet the 183-day rule for Minnesota. If you meet the federal Minnesota filing requirements, you're going to need to go ahead and file a federal and a Minnesota tax form. Generally, what we'll say is if you had to file a federal return and you had any Minnesota income, you're also going to need to file a Minnesota return as well. And that applies to many states as well. All right, the Minnesota 183-day rule. It's a little complicated, but it has two parts to it. The first part is that you must spend at least 183 days in Minnesota, and any part of a day counts as a whole day. And then the second test is that you must rent, own, occupy, or maintain an abode. An abode in Minnesota is a residence that is suitable for year-round use, that is equipped with its own cooking, bathing, and sleeping facilities. If both conditions apply, then you are a Minnesota resident for the length of time that only the second condition applies. So if you are here for at least 183 days, which is essentially 6 months, and you rent an apartment for 1 month, but you were living in, say, the dorms for the other 5 months of the year, because the dorms typically don't have their own cooking and bathing facilities within their units. That would not count as an abode. And so you would be a resident of Minnesota for only that 1 month that you rented your apartment. Even though you were here present for more days, but because you did not rent an abode for more than that smaller period of time, you would be a resident for just that one period of time. So this can result in essentially 3 different residency statuses. So to be a non-resident of Minnesota, you could be present here for less than 183 days during 2023. And it doesn't matter what your living status is. If you weren't physically here for 183 days, then you're a non-resident automatically. Or you could be here for 183 days, but you never rented, owned, occupied, or maintained, and your spouse, an abode at any point during the entire year. So this would often be a student that lived in the dorms the entire time. You could be a part-year resident, which means that you are here in Minnesota for at least 183 days, and you and your spouse rented, owned, occupied, maintained for some part of the year. That was like my example, right, where you rented an apartment for a month. That would make you a part-year resident. You are a resident for a month. You are a non-resident for the rest of the year. Or you could be a full-year resident. You could be present in Minnesota for at least 183 days, and you or your spouse rented, owned, occupied, or maintained an abode for the entire year. So in this case, right, you may have been physically present for only 6 months or 7 or 8 months, but if you rented for an entire year or owned or occupied, that would make you a resident for the entire year. Now, this has 2 big effects on your Minnesota tax return. The first one is that only part-year or full-year residents are eligible for a property tax refund. And then there are additional requirements to be eligible as well. So again, you must be a full-year or part-year resident. You cannot be a dependent, so you must have provided over half of your own support. We have some information in our guides to help walk you through determining whether you meet this test or not. Again, you must have lived in a unit, which is an abode. That unit must have been subject to property taxes. So some buildings are owned by nonprofits or government exempted organizations such as the University of Minnesota, and they don't have to pay property taxes. And so if you don't have to pay them, you can't get a refund on them. If you do live in a building that has to pay property taxes, your landlord should send you a certificate of rent paid. You should send it by the end of January. And that will say how much rent you paid, and then it'll give some additional information about the building so that you can file your property tax refund. The good news is that it's available for any filing status. It just is based on your living situation. If you are a homeowner, you must have a valid Social Security number. This is our dependency evaluation worksheet that's in our Minnesota Property Tax Refund Guide. that helps you walk through determining, are you a dependent for the Minnesota property tax purposes? When you look at this, you need to look at all of your expenses that you've paid to kind of live and go to school here in Minnesota for the calendar year of 2023. And then look at your income, like where did that money come from to support you? So as you look for that information, you can get your tuition from your one-stop student account. You know, the general kind of rough estimate of the tuition cost is something like $36,000 a year. Your rent you'll get from your property tax statement, so that's pretty easy. The University of Minnesota meal plan. A full meal plan costs about $2,500 a semester, so at least $5,000, $6,000 a year. There should be some money for clothing and fun, right? We live in Minnesota and generally the winters are cold. If you need some warm clothes in the winter, something else, and you're in college, hopefully you're having some fun out there. So that should be a non-zero amount. And when you start to add all of this up, right, you're looking typically at over $42,000 to kind of live and go to school here in Minnesota. And then, do I have the next one here? All right. When you look at income, you can add your earnings from your wages that you've earned. You can add any scholarships that you received. You can add any loans that you've taken out that you're legally obliged to repay. And then generally the difference for whatever shortfall there is comes from most people's family, from their support. And that's great, right? That's fantastic. But that does often mean that many people are not eligible for the property tax refund because their families provide more than half of their own support. All right, the next thing for Minnesota tax residency status is for what income you have to pay tax on in Minnesota. So if you are a Minnesota non-resident, or for the parts of the year that you're a non-resident, if you're a part-year resident, you will only pay Minnesota tax on income from Minnesota sources. You will pay Minnesota tax on all of your U.S. income that is earned while you are a Minnesota resident. So if you worked in another state, you'll need to determine your Minnesota residency. We have a guide to help you with this as well. We're working on an improvement to include that in our personalized guide tool, but it isn't quite released yet. But basically, you're going to look at where were you physically present during the year? Was where you were living, was that an abode? If you were not in Minnesota, did you still maintain your residence in Minnesota? How many days was it? We need to add up the total days. And then for that period, you need to determine if you were a resident or a non-resident. So for example, if you lived in an apartment in Minnesota in the spring semester, you had an internship in California, you went out there, lived in an Airbnb, earned income out there, but still paid rent in Minnesota because you couldn't find anybody to sublease your apartment. And then you came back and you were here again in the fall, you were living in your apartment again. Because you paid rent the entire year, that would make you a full year tax resident of Minnesota, which would mean that you would need to pay Minnesota taxes on that California income because you still maintained your Minnesota abode, your residence during that time period. If you had not done that, let's say that you found somebody to sublease your apartment over your summer, so you left Minnesota in May, you didn't pay any rent at all over the summer, you came back, you moved back into your apartment. Because you were not maintaining, rent to own, occupied, maintaining an abode that summer, that income in that period of time would be while you were a Minnesota non-resident, and because it's not from a Minnesota source, you would not have to pay Minnesota tax on it. All right. All right, for the Minnesota income tax return. So there is no equivalent in Minnesota for the Form 8843. So if you don't have any US income, you're just here on an F or a J visa, you fill out that Form 8843, send it off to the IRS, don't have to do anything for Minnesota. Generally, Minnesotans must file a tax return for non-residents if their income is above the filing limit. So for individuals that can do the standard deduction, which are only, again, those students from India, so researchers, scholars, all of the others, they don't get that standard deduction, it's only students. That limit is $13,850. For everybody else, it's $5. And we generally say, if you have to file a federal return, you should just go ahead and do your Minnesota return. Even if you're not required to, Send that form in. That way they know what your income is, they know what your situation is, and sometimes you get a refund on some tax that was withheld. The Minnesota return is prepared after you do your federal return because it starts with some federal numbers, and you have to include a copy of your federal return when you file your Minnesota return as well. Minnesota taxes are due on April 15th, and balances must be paid by April 15th as well. If you're filing the Minnesota property tax refund, that is actually not due until August 15th. However, you can go ahead and file it early with your income tax return. The refunds for this are also not sent until after this date, and you have 1 year after the due date to claim a refund. So if you forgot to do it last year, you can still claim that refund and file that form. The direct deposit for refunds is a great idea, particularly for the property tax refund, because many students will move over the summer. And so this way, if you do a direct deposit, your bank account doesn't move, and so there's never any worry about will the check find you. If you make a mistake on your return, you generally have 3.5 years to file amended returns with the state of Minnesota and the IRS to let them know about what that mistake is. All right, and here are some links for some additional information, and you can also reach out to them directly. They are very helpful and very happy to help if you have any questions. All right, so let's talk about our tax clinic here. So this tax clinic is for the one at the University of Minnesota. However, we also have just a general North International Tax Clinic that's available for anybody who is has a school, nonprofit, or government email address. So please see our website. We'll be very happy to help you with your tax return. So our tax clinic is, I'm going to throw a whole bunch of letters at you. So it is an IRS VITA FSA clinic. IRS is the Internal Revenue Service. That's the federal government organization that's in charge of the tax collection system. VITA stands for Volunteer Income Tax Assistance. So the people that help at this clinic are all volunteers, and they're here to help you with your income taxes. And then finally, FSA. FSA stands for Facilitated Self-Assistance, which is essentially DIY plus help. So you're the DIY, you're going to do most of the work, but we are here to help you. We provide free tax preparation support for those who are in scope. Again, school, nonprofit, or government email. It doesn't have to be a U.S. organization, so if you are back home in your home country and you still are at your school or government or nonprofit, you're welcome to use one of those emails also. We help non-resident aliens, resident aliens, citizens, nationals, permanent residents, basically everybody, as long as you've got a good email. One other requirement that you should know kind of up front is that the software does have an income limitation of $79,000. So if you have earned more than that, unfortunately, the software will not work for you. You will need to find another option. There are also some types of income that we cannot help with that the IRS has determined are out of scope for us, such as cryptocurrency and other digital assets. If you are out of scope, depending on what the situation is, often the software will still do your return, such as in cryptocurrency, but we can't answer any questions about it. So you can go do a little research on the IRS website and enter that information in. Other situations, such as dual status aliens, the software doesn't really even do those. And then that income limit, again, is hard-coded. There's just no way around that one. All right, a little bit of information. So we helped almost 2,000 people file their returns last year, got about $1.25 million in refunds, supported over 3,000 members with 46 volunteers, and had 36 events last year providing support to people, and help people in a large number of schools all around Minnesota and the United States and the world. And our goal this year is to help even more people. So we're happy that you're here. We provide 24/7 access to TaxSlayer software that will let you do your federal and your state returns, both prepare them and generally e-file them. We have tools on our website to help you determine if you're a non-resident alien, as well as any treaty benefits that you might have. We have personalized guides for non-resident aliens, and we have it's launched now, the 8843 only version. That's not coming soon anymore. It is here. These basically provide a step-by-step PDF with screenshots to walk you through how to use the software to prepare your return. The software works, but it's not always the most user-friendly, and so this kind of helps step you through all of the processes to do that. We also provide individual support. So we have IRS trained and certified volunteers, and we have tax clinics, so appointment-based support, both in person at the U of M as well as remote. We do limit those to one appointment per individual. We have office hours, which are remote 20 minutes appointments, and then you can have one of those per day. So if you need more help, you can just schedule a few of those as well. We also do email support as well. Generally, it's either complex issues or things like resolving e-file problems. If you have a really simple question that's already in a guide, we might send you back to that, but otherwise we're happy to help. And it's open to everybody. So if you are a member at our site, you're welcome to book an appointment with us, send us an email. We'll be happy to help you. If you can make it to our physical events, we would love to see you there. These are all of the different guides. So if you don't want to use the personalized guide, basically you can kind of read through, choose your own adventure, pick and choose all of the pieces from these different ones that would apply in your situation. The personalized guide essentially asks you questions to just like pick out all of the stuff that would only apply to you and not give you all of this additional information that you have to wade through. So the first thing that you're going to want to do is request a membership. You can go to this website here or just go to our general North email or website account, www.nrtaxhelp.org. You need to use your school email. It doesn't have to be U of M if you're not from the U of M and you're watching this, but it does need to be a school, nonprofit, or government email. We will delete your account if you do request one without like the general email like Gmail or something like that. You're going to need to get ready, gather all your income documents, make sure you don't have anything that's out of scope, and then create your personalized guide, go through it, use the software, file your return, and get help as you need to. One more very, very important thing that you should know, which is when you use the tax software, you must create your account using the link on the member pages. If you just Google TaxSlayer and you go to that website and you create your account there, that will give you software, but it will give you the paid version of the software, and they will want you to pay a fee for that. And you do not have to pay a fee. But to get the free version, you have to come through our website. It puts a token on your account that basically gives it to you for free. So please make sure when you're creating your account that you go do that through the link on our website. If you need more help, here's some other information. You can also find it on our main website page for additional support. Excuse me. All right, at this point we had a visitor from the University of Minnesota Low-Income Tax Clinic come to talk about the services that they provide. So the Low-Income Tax Clinic was founded in 1981. The supervising attorney is Professor Caleb Smith. We have 10 student attorneys and 4 student director attorneys here that support clients through the University of Minnesota Law School. It's funded by a grant from the IRS, and they provide free legal advice and representation to clients who have a dispute with the IRS. So what does this mean? That means that if somebody has a problem, such as an audit, a filing, a collection, if you get a letter, they can advise clients on how to handle that and how to respond. They can represent clients in tax court and federal district court. So if things don't go well, they can sue the IRS on your behalf, and they would be very, very excited and happy to do that. They also advocate for state policy changes that benefit low-income taxpayers. The one thing that they do have is that they cannot help with only federal and state tax return preparation unless it's in connection with a larger issue. So they won't do generally like new returns. That's what we're here for. And then one other note that I added, they also don't help with state-only issues such as the Minnesota property tax return. They will help with state issues when there's an underlying federal issue, but there's got to be kind of that federal controversy. So something is not good between you and the IRS, and that's when they're very happy to step in and help. They have a different requirement for service than we do. So we say, if you have the right email, we'll help you. They base their support on your income level. So it doesn't matter what your email is, but it matters how much income you received. So for individuals, you would use this table and multiply it by 2.5. So if you are single, for example, and your income is below 36,450, you would be eligible for support. If it was above that, you would not be eligible for assistance with them. You could still talk to them and they would probably provide a little bit of information for you, but they wouldn't actually be able to like officially represent you in front of the IRS. A couple of examples of some tax cases that they've filed, right? You file your taxes, you don't hear anything back. You get a letter from the IRS that says, you know, you made a mistake. They can help you with that situation. Um, basically, essentially, it's really when something goes wrong with your return and you get a letter saying that you have to pay money and you may or may not have that money available to pay. That's when they can really help represent you to make sure that the money that the IRS is asking for is correct, and then help you with payment if you have some challenges there. All right, I'm going to skip over that. So there are options for payment that they can help advise you on as well. So if you owe a lot of money but you can't pay it right away, you can get an installment agreement. And if you will pay it generally within 6 months, pay the full amount, or 6 years, pardon me, that will be generally accepted by the IRS. They can work with the IRS to say that your amount owed is not collectible, which means that you just don't have enough money to make any payment. And so they will stop sending all of the scary letters, although they will generally still take any refunds that you get and apply those to the amount you owe. They can also work through an offer in compromise where they settle the debt for less than the full amount owed. If you do that, you have to be good with the IRS going forward. So you have to file and pay on time. And there's a calculation for determining who essentially is eligible for that. And that process does take a while. It can take up to a year. So those are all available if you have problems paying. But generally, they are the better the deal is, the longer it takes for it to work through the process. And not everybody will be eligible for it. If you have an issue, you are very welcome to contact them. So the way that they do their intake is you call this phone number, you speak to somebody at the low income tax clinic. They will do a screening and intake process on the phone. That'll get passed on to the clinic attorney, Professor Smith. He'll look at whether they can help you based on your issue, based on your status, and then they will reach out to you to talk to you more about the details and either move forward or recommend other options for you. All right, and this is the point where we took a break, and so I am going to stop here before we go back into a demo for the tax year 2023 personalized guide tool and the software. So if you want to see that demo, that's going to be on the Do Your Taxes page. If you scroll down a little bit into the guides section, it'll be in there. And that's the end of our re-recording of this session. I thank you for your time, and I hope to see you at a tax clinic soon.